All right, hello there. Welcome to this video where I take you through a real life comprehensive past exam question on correction of errors and suspense accounts. By the time you're done with this video, one thing I can promise you is that you will be a pro when it comes to understanding correction of errors and suspense accounts, including the correction of wrong profits. So this is a real exam question. My approach is quite different from everybody else. I will start from a very complex question and then break that question down to its lowest level possible, and then in the process teach you the topic. So rather than starting from the concept and working all the way to the question itself, let's reverse engineer the process. Let's start from the top level, which is the question, and let's use that to understand the concept. So, as the name implies, we are talking about correction of errors. This implies that someone has made a mistake. Someone has committed an error in recording certain transactions or in putting certain transactions in the books. There is a second component which is called suspense accounts. And for your very basic understanding, let's see suspense accounts as the name implies, it's a temporary account. So suspense accounts are very temporary, and their purpose is, because the name is suspense, we suspend certain balances in that account whilst we undertake investigation. So the purpose of the suspense account is to suspend certain transactions there as we investigate what is causing their errors. So we'll talk about correction of errors and we'll talk about suspense accounts. Now, the best practice when it comes to exam questions is to always read the preamble and then you read the requirements, right? So here they're saying that this company is a sole trader with a small business. Then they have a trial balance, right? Regardless of your level of understanding of accounting, no worries. A trial balance is simply a list of accounting balances. That is all. It is called a trial balance. The name trial balance comes from the word we are trying to balance. So you can see it as trial balance. We are trying to balance. So it's simply a list. You create a table of some sort. So you have all your debit balances, you have all your credit balances in one table. You list them all up, and then you try to see if they balance. That's a trial balance. So a trial balance is simply what? A table that lists all debit balances on the left, all credit balances on the right, really, with their descriptions, obviously. So their descriptions will be on this side. Then when you add everything up, if it balances, then everything is right, okay? So a trial balance is simply a list of balances. So saying the trial balance extracted as at 31st December failed to agree. It means when we did the list of balances, it was not in agreement. This clearly suggests that there were some errors committed in the bookkeeping process. Here they are saying the credits, which is the right-hand side here. So give me a second. The credits, right, exceeded the debits by 26,180. So it means the person doing the entries ended up having more credits. So the credits were higher than the debits by 26,180. All this means is that they had more credit entries than they had debit entries, really. So our exercise today will be to investigate what caused this error, and then I'll show you how to correct all of these errors in the process. So they are saying a detailed examination of the books was undertaken and the following issues were uncovered. So we'll go through these bullet points and that will tell us, or by the time we are done, we would have attempted to correct all of these errors. What is required of us? First is to prepare journal entries with appropriate narratives necessary to correct the above errors. So like I said, like I promised you, by the time we are done with this exercise, we've gone through the whole video, you will know how to correct errors. I promise you that. The next is to prepare a suspense account to clear the difference. Remember I told you at the top that a suspense account, as the name implies, is just a temporary account where I keep balances that I'm investigating in suspense temporarily whilst I investigate. So as you can see, the question is saying that we want to prepare a suspense account to clear the difference. Remember the difference is what? 26,180. And we said it is because the accountant ended up having more credit entries than debit entries. Ordinarily, this should not happen because if you remember, the double entry rule is simple. For every debit, there is a corresponding credit, right? So if they did the right thing, then the debit should have ordinarily equaled the credits. But now they have more credits than they have debits. So it means they did some wrong things here and there. Don't worry, we'll fix that. Then the final thing, which I think is a very key skill to have, is to prepare a working schedule showing the effect on the proprietor's loss in correcting each of the above errors, assuming that the loss before adjustments was 293,090. So this is one thing where we call this correction or adjustment of profit. And here, I'll show you the easiest method in the world to correct profits. There are different approaches. There are some that require you to memorize a certain approach, memorize a certain method. I will show you the easiest way in the world ever to correct profit arising from errors that you have corrected. So, first thing we'll do is to correct the errors. Next is to prepare a suspense account. And this final one will be to prepare a statement or a schedule that will correct the business's profit or loss based on the errors we have corrected. This is a question that first one is for 7 marks, next is for 3 marks, and the next one is for 4 marks. That's a lot of marks. 14 marks is a whole lot of marks in an exam. So without wasting any further time, let's start. Remember the first question said we should prepare journal entries with narratives necessary to correct each of the above errors. That's what we're going to do exactly. Like I said, follow me through to the very end and you will understand errors or correction of errors through and through. So what I'm going to do here is for each error I take, I will explain what the error is and how we'll correct it. So let me give you a simple framework before we start on how to correct errors. If you are correcting any error, think about this. Think about it like this. First question you ask yourself is, what has happened? That's the first question you ask yourself. What has happened? The next question you ask yourself is, what should have happened? So first question, what has happened? Next question is, what should have happened? And the third question is, what do I do to make or to correct the difference? So to even make it sound funny, first question is, what has happened? Second question is, what should have happened? And the third question is, what should I do to make what has happened become what should have happened, right? So that's what we're going to do. For each one, I'll tell you what the mistake is and what the right thing should have been, and then we'll correct it. So the first one, they're saying no entry has been made for expenses paid with cash from the petty cash still. The expenses amounted to 826. So here, we need to ask ourselves one question. If someone pays expenses, how would you record the entry? So first thing, let's ask ourselves, what has happened? Someone has paid expenses with cash. The person forgot to record it because they said no entry has been made. So someone has paid for expenses with cash and did not record it at all. For those who want to know the types of errors, this can be called an error of omission. I'm not too keen on the names of the errors, but some people are so obsessed with that. So there's an error called an error of omission, right? So these are errors. It's a type of error that will typically not affect the balancing of the trial balance, because if you don't record the entry at all, it will not even feature in this table up here. So your trial balance will still balance, although the figure will be wrong. So the first one is it's a typical error of omission, but let's not stress too much about the names. So like I'm saying, you've paid for an expense with cash. What would you have done? Ordinarily, what would you do? Expenses are debits. So don't forget, I'll take you through double entry in a separate video. But for now, let's assume you have some basic double entry understanding. All expenses are debits, right? So to increase an expense balance, what do? You debit. So typically, I would here debit my expense account with the amount. Then I will credit cash. Why will I credit cash? Cash is an asset, and assets have debit balances. So to reduce an asset balance, what do? I credit and make the reverse or the opposite entry. So all I need to do now is, they are saying this thing I've written here hasn't been done. So all I need to do is to do it, right? So the first thing is, the I task is to prepare journal entries to correct the errors. So these are my journal entries. Okay, so typically journals will have two sides. They'll have a debit side and then they'll have a credit side. So the first one, remember I said we want to make an expense payment with cash. So my debit will go towards my expense. They didn't tell me which type of expense, so I'll just say my expense account. What's the figure? Right here, 826. So I debited the expense 826. Then you can decide to indent. So you leave some space for cash and then a credit cash with 826. Remember they asked us to write narratives. So here you just say what should or what that transaction relates to. So you can just say, usually we start with the word being. So being cash expense not recorded. That is all, you're done. So here you are saying that you are debiting your expense with 826, crediting cash with 826 to record something that they did not do. Remember, the whole idea is you're following double entry. When you incur an expense and you pay cash, you debit the expense account because all expenses have debit balances. Then when you make a cash payment, obviously you credit cash because cash is an asset, and by making a cash payment, your asset of cash is reducing. So if cash is an asset and assets are debits, then by crediting cash, you are reducing what? The cash amount. So that does it for the first one. Remember that here, it does not affect suspense account yet. I'll tell you why. It's because this is what an error of omission. And this is clearly a type of error that does not affect the balancing of the trial balance. So at least we've learned something new here, that errors of omission, which is a type of error where you don't record a transaction at all, that will not affect the trial balance, either balancing or not balancing. It doesn't affect it at all. The next thing we have here is they are saying discount received of 770 was debited to discount allowed. The entry in the payables personal account was correct. Now let's come back to first principles. Discount received, what is it? Discount allowed, what is it? Would you agree with me that discount received is clearly an income account? or an income item, whereas discount allowed is an expense item or an expense account. Now, if discount received is an income account, we know that all income items have what? A credit balance. We know that all expense accounts have a debit balance. So keep this in mind. So far, you've learned that what? All assets have debit balances. We've learned that all expenses have debit balances. We've learned right now that all expenses also have debit balances. And then we've learned that income has a credit balance. So let's continue. Don't worry if you're too overwhelmed. Like I said, just follow through. Everything I do, just write along with me. By the time you are done, you realize how much you've learned through the process. So the next thing is this transaction. So here, discount received of 770 was debited to discount allowed. So remember I just said here that discount received is income, so it should have been credited. But here they say the person debited it instead to discount allowed. So this is something that they have done wrongly. If they have done it wrong, what it means is that if you go to the discount allowed account today, you will see a debit balance on the discount account and discount allowed account. Our job is to remove it from there and bring it to discount received. Now, let me ask us a simple question. If you have something that is a debit and you want to reverse, what do? You credit it. In the same way, if you have something that is a credit and you want to cancel it, you debit it. See it like this. If I open a T account and I call it discount allowed, and they are saying that 770 has been debited to this account with the description. Okay. If I want to cancel this 770, don't you agree with me that all I need to do is to make a corresponding entry here on the credit side such that now the balance on this account is what is balanced out. 770 here, 770 here. So we are going to make a corresponding entry. If they are saying discount allowed has been debited, we are going to credit discount allowed. So let's leave a space here for the expense and the debit line, and let's indent. So the first credit entry I'll make is to the discount allowed account. So I enter discounts allowed. What is the figure? On the credit side, so 770. Now, this credit to the discount allowed has now cancelled this debit here. So now the discount allowed has no 770 again. There's no 770 balance on the discount allowed account. So now I need to do the right thing. What is the right thing? Remember I said discount received will have a credit balance. So now I need to actually make the proper entry, which is to credit discount allowed. So I credit, discount received. So I credit discount received with 770. Now you can see that something funny has happened here. Both of them are on the credit side. So what goes to debit? You can see I've kept you in suspense. So since you're in suspense and you're not sure where to take the figure, then we take our debit to the suspense account. But remember in accounting, always your debit entries should equal your credit entries. So if here we have been able to say that our credit entries will be 770 times 2, which is calculator 770 times 2 should give me 1,540. Then it means that my suspense will be 1,540. Because don't forget that every day your credit balances should equal your debit. So if it's 770 here, then times 2 should go to my suspense account. So this is it. Suspense, you've seen one use of it. You are not sure where to take the figure. There's no clear double entry. Take it to suspense account. Okay. So we've seen two entries so far. The next one. You're saying sales returns. And anytime you see sales returns, what should come to mind is this. Let's break the word down into its simplest form. They are saying sales and returns. So it means you sold something and the person returned it to you. Do you agree? So this is what we call in accounting returns inwards. So another name for sales returns is what? Returns inwards. It means you sold out. Let's say you sell mobile phones. You sold an iPhone to someone. They came back and said they wanted one that had a 512 GB memory card or memory space. Then you sold one that had a 256 GB instead. So they returned it to you. It's called a return inward because they returned it inwards to your business. They made made a sale and then they returned it to you. Now, if you want to know what balance sales return will have, let's think about it this way. When someone returns goods to you, does the goods you have increase or decrease? So example, you had 5 iPhones, you sold one. So now you are having 4 iPhones left. Someone returned one iPhone back to the business. So now you have 5 iPhones again. So returns in what increase a business's inventory. Take note, inventory is also known as what? People call it stock. So a business's stock of goods will increase as a result of what? Returns inwards or sales returns. And take note that inventory is an asset. Your goods that you have as a business are assets. Remember, I told you all assets also have what? A debit balance. So if all assets have a debit balance and returns inwards will increase your assets of what? Inventory, then returns inwards themselves also have what? A debit balance. So right now you've learned also that in addition to assets, in addition to expenses, we also have what? Returns inwards also having a debit balance. If that is the case, then they are saying that this returns inwards or sales returns that should have a debit balance. They said it was treated correctly in the customer's account. So it means on the customer's side, from the customer's perspective, they did the right thing. But it was credited to the sales returns account. Remember, I told you that it should have been what? Debited. So even here, the examiner is giving you a clue that the credit is the wrong entry. They're trying to tell you that, listen, it should be a debit. I hope you're hearing me. It should be a debit, right? But if you don't listen, if you don't read carefully, you might think that what you might not pick the clue up. So you're telling you that it was credited to the sales returns account instead, right? As 6230. So what this means is that, let me clean this. What this means is that if you go to the sales return account right now, they are seeing that a credit figure of what? 6,230 is currently sitting there. So let's visualize it. You have 6230 here. What you want to do is that, see, it says sales returns of, the correct figure is 6860. This right here, this is the correct figure, 6860, right? So our ultimate aim is to have 6860, but we currently have 6230 here. What do we need to do to make our 6230 become 6860? First thing you need to do is to record a 6230 here to cancel this guy. You know, once you make a corresponding entry on the other side, it cancels it out. See it as a matching entry, double entry, right? There is a 6230 here. So let me even go back one step. There's a 6230 here. I want to cancel it. So what do? I record another 6230 here. And that will what? Clear the first, the one that is a mistake. So let's come here. Well, before we even continue, let's write the narration for the second one. They say we should give them the narration. So what was it? Discount received was debited. Let's just write being, okay, okay. So this is being discount received. They said was debited to discount allowed. Okay. Wrongly treated, now corrected. Here, be flexible. There's no hard and fast rules, right? You can just start with being and end with now corrected, and you're good to go, really, right? So that is it. Back to the third one. So here I'm saying that what we need to do really under I, and don't worry, I've left a PDF, a link to the PDF downloadable. I've pinned a comment, and I've also placed it in the description box. You can just click the link and download the question to try on your own after you've gone through this with me later. So remember, we have sales return. Like I said here, all we are going to do is to record on the debit side, this one, an entry to counter what we currently have here. All we're going to do is a countering entry. So let's come here. So since we want to debit, what we do, debits always have the leading edge. So I come to the corner here and I write what? Sales return. What's the figure I want to do? 6,230. So this entry clears the 6,230 we have here. So now I know that I have 0, right? So I have 0 here. Okay, that's not what I meant. All right. So now that I know I have cleared this to 0, it doesn't exist anymore. Now I have to do the right thing. Remember I told you that what? Sales return should have been debited instead. So now I come here and I debit with the correct figure, which they gave us as what? If you watch here, 6860. So I just come here and write 6860, right? So if I'm supposed to debit with 6860, then I have to come here and say what? I'm going to debit the sales return account, right? So I debit my sales return account with what? 6860, right? Now, we have fixed this part. What goes to credit? If you look at the question, they said what? It was treated correctly. So give me a second. Was treated correctly in the customer's account. So it means on the customer side, there's no mistake. What that means for us is that we are still looking for our credits. We don't know what should go to credit. We are in suspense. We are not sure. So what do? You take it to, so you leave an indent. You take the credit to suspense. And as usual, remember I told you that the sum of your debits should equal what your credit. So let's just add 6230 to 6860. So 6230 plus 6860. That gives me 13090. So my credits going to suspense is 13090. Okay. So we are done with the third one. We are making progress. Let's go to the fourth one. Under the fourth one, what are they saying? They are saying the total in the something called purchases day book was debited to the purchases returns account. So all we need to do is ask ourselves, what are these accounts? Now, the purchases day book is something we call a book of prime entry, or a book of subsidiary entry, or a book of original entry. What does this mean? What are all these words, right? A book of original entry, as the name implies, is a book in which you make your first entry, your original entry. In these days of computerized accounting, this may not be relevant, but all you need to know is that a purchases day book, key takeaway point for you is that it's a book of original entry. We enter all our transactions in it. It does not follow the double entry principle. So nobody does double entry in a purchases day book. We also have something called a sales day book. So purchases day book is simply, see it like a notebook or a journal. You open it, when you buy something, you write it in. You buy something, you write it in. It's like a journal, purchases journal, like a diary. You buy something, you write it in. You buy something, you write it in. At the end of the month or the end of the period, if it's a week or a month, you sum all the transactions in the purchases day book and then you post it to the purchases ledger or the purchase account. I'll take that again. It's just an account, or it's just a book in which you list transactions. When you are done listing, then you post all the transactions there properly. Now you sum them up total, then you take the total to the appropriate account using double entry. So the day book itself doesn't follow double entry, but the sum is what follows double entry. So here they are saying the total in that notebook of 120,000 was debited to the purchases returns account. The truth is, purchases day book total should have been debited to the purchases account because it's simply a list of all your purchases, right? So if you sum them up, obviously the total should go to the purchases account. And here we've learned something new. All purchases are debits. Remember the list so far? All assets are debits. We said all expenses are also debits. We even said all returns in what's right here are debits. Then we've added purchases also being debits. Okay, so if they are saying that the total that should have gone to the purchases account as a debit has now gone to purchases return as a debit, we need to correct that. Now let's look at the second leg of the transaction. What is the purchases returns account? Remember how I explained sales returns here? So I said here that sales returns was simply what? Returns inwards. As the name implied, I sold to someone and then they returned it to the business. So returns inwards to the business. Purchases returns is where I go and purchase from someone and I return it to the person. I don't want the goods anymore. So let's say I wanted to buy a MacBook Pro, then the person mistakenly gave me a MacBook Air. I did not check the box. I came home, I saw it, and then I returned the goods. You can see I made a purchase, but I've returned it. So we call these returns outwards. Now think about it like this. If I buy 5 MacBook Pros and let's say one of them is defective, so I return that MacBook to the Apple shop, my 5 will reduce to what? To 4. So purchases returns has the effect of decreasing my inventory. So remember that we said for sales returns, what did they do? We said they increase inventory because you sold to someone and they brought it back. So now you have more things to sell. Purchases returns, on the other hand, decreases your inventory because you bought more, but you've returned one to the person you bought from. So you have less available. If inventory is an asset, like we said, and assets are debits, anything that increases your assets will be a debit. That's why we said returns inwards are debits. So returns outwards, because they will reduce your assets, it goes to show that returns outwards are credits. As a result, purchases returns will be what? Credits. They have credit balances. So the original nature of a purchase return account is what? Credit. If that is the case, then let's come to this question. They are saying that the total of the purchases day book was debited to the purchase returns account. So it means when we go to the purchases returns account today, what we'll see there, let me clean this, is this. So we have purchases return. They are saying that what 120,050 has been debited to this account. So it means I'll see 120,050 here with a description. This figure doesn't belong here. It should be in what? The purchases account proper, not the returns account or the purchases. The purchases account, which shows how much I have purchased. So what do? First step is what? As we've been doing so far, clearly do what? Enter a corresponding entry here, 120,050, so that you now cancel this one to make it 0. You can see there's a trend. Always try to visualize and to be easier for you. So before we continue, let me okay. So let me write the narrative for this. So it's going to be being or the transaction sales return Okay, creditor to sales returns account. All right. So it's being sales returns wrongly treated, now corrected. All right. So let's come back to what we're doing, the one on purchases. So like I said, right here, it said what? It was debited. So all we did here was what? Enter this guy on the credit side to cancel off. So I come here, as usual, I try to indent. So I try to follow this line here. Let me just clear this. So on the credit side, I have my purchases, returns account. What's the figure? 120,050. So I enter 120,050 on the credit side. Now, what goes to the debit side? They said the total of the purchase day book was debited to the purchase returns account. So it means they have not done the right thing in the purchases account. So I credit this purchase return to cancel it. Then now I do the right thing in the purchase account. So I go to the purchase account and I debit purchases with 120,050. So we can just say being wrong entry in purchases returns account, now corrected. Simple. Then we come to the next one. You're saying the bookkeeper. So this is quite slightly complicated, but don't worry, I'll break it down for you. Remember, my approach is let's start from something difficult. Let me clean all of these, and then we work our way to what you should understand. Okay, so they're saying the bookkeeper forgot. Forgot means he omitted. He did not enter these at all. So he forgot to post the wages and salaries journal for December 2018. No payment has yet been made to either the employees or the statutory authority. So we know this is something we must do from scratch. There is no wrong entry to correct. We had to enter the entry ourselves. The relevant figures are as follows. Wages and salary costs. This is gross. Gross means that what the whole amount without deducting taxes or any other deductions that have to be made. 71,000 is the figure. Then employer's social security. This is the cost of the employer when it comes to contributing to their employees. So this is a cost that the employer will have to bear. So this is an expense for the employer. The next is what? Employee income taxes. That's pay as you earn. Employee income taxes are deducted from the employee salaries before they are paid. That's 21,315. So these entries are to be made. They have not been made. It is our job to record these transactions. So there are a number of ways you could look at this. Like I said, this one might be slightly complicated, but don't worry, I will break it down for you. So here, see it this way. So V, we have an employer, or even the accountant was required to record these transactions. He did not. So what would you have done if you were the accountant? Let's even start from the payment side. Obviously, we will make payments to some of these authorities. So we have two ways you could look at it. It's either you're going to pay in cash, so you credit your cash account, or if you're going to pay with a check, you credit your bank account to reduce the asset of bank because assets are debits. Or if you've not paid yet and it's going to be a payable, you know liabilities are also credits. So what do? You would have credited these accounts, which is employer social security, and then the corresponding amount for how much the employees will receive. So here we have two options really. Let's start with the credit side. How much are you going to pay your employees as salary for the month? It is going to be what? The net figure. What will be the net figure? Would you agree with me that the net figure you pay to your employees is what the difference between two things, which is the gross salary and what's any employee taxes? That's all. So remember, like I said, don't be tempted to deduct this social security because they said it's employers, not employees. So this is the employer's cost. If they said employees, then you would have deducted from the employee salary, but this is the employer's cost. So what you have as net is 71,050 minus 21,315. The difference will be the net salary the employee gets. So since they have not recorded this at all, our first task would be to make a credit, right? So we are going to credit the net salary or net wages account, whatever you want to call it, with with the difference of 71. So subtract, take your calculators, 71,050 71050 minus 21,315. That gives me 49,735. Okay, now that I have this net salary figure, what do I need to do next? The next payment I'll be making obviously is the payments with respect to what taxes. Don't forget that once I've paid the net salary to the employee, I also need to make my meet my statutory obligation. So I need to pay two things, which is my social security and my taxes. So the sum of social security, this 21. Sorry, that's the sum of tax and social security, these two. So that will be social security and taxes. So I sum 6,300, that is for social security, plus 21,315, that gives me 27,615. Okay, now these are the payments I have to make and I'm done. I've paid them out. Now, what goes to the debit side will be the expenses, the cost that the employer will bear as an employer. So let's come back here. What are the costs the employer will bear? There are two of them. The employer does not bear the PAYE. This one. The employer does not bear the employee taxes. It's for the employee. So when we are talking about the debits, which are the expenses, to be two things, the wages and salaries, this, and then the employer social security. Those two are the costs the employer will bear as an expense. So we'll debit the expense account with these two. So our first debit will be towards wages and salary costs as an expense of how much? 71,050. The next expense will be the employer social security. Employers social security of 6,300. And you realize that the debit and the credit sides are in agreement. So really, this is how you treat it. If it's complicated, don't worry. Just see the debit side as the expense the employer has to bear, which is two things. The gross cost is there because they're the one paying the employee. So the gross cost is theirs. And then the social security portion is also theirs. The credit or the outflow, what they pay, will be the net salary that hits the employee's bank account at the end of the month, and then the social security and taxes component that they have to pay as part of it. So if you watch it carefully, it's really a debit and credit of the same figure. You could have just added everything up and that would have been it. So it's not rocket science. If you don't get a split, it's the sum of everything together. And luckily, this does not affect the suspense account. So we are good to go. So you can just say being employment related costs omitted, now corrected. That's it. All right, we're almost done. The next is what they're saying, a sales invoice. Okay, a sales invoice of 7,350 was entered in the sales day book as 6650. Remember I told you at the top here where we met the purchases day book that the day book is essentially just a book where we enter initial transactions. So purchases day book is just a list. You go in, you buy something, you write it in, you buy something, write it in. End of the month, you sum everything up, then you post it to the purchases account on the debit side. Similarly, in the sales day book, it's just a list. You go, you sell something, you write it in, you sell something, you write it in, you sell something, you write it in. At the end of the month, you sum everything in the sales day book and you post it to the credit side of the sales account. Because obviously, if purchases has a debit balance, then sales will have a credit balance. So all we need to do now is there is an error and we need to correct it. So here we have a sales invoice of 7,350 that has been entered in the sales day book as 6,650. So there's something here which we call an undercast. So another question may have said undercast. So here, anytime you see undercast in accounting, casting simply means to add up or to sum, to add or to sum. So when you see undercast, it means the figure has been understated. They have put there less than it should be. If you see overcast, it means they have recorded more than they should have. They have over added, overcasted, over added, right? Undercast, overcast. So here, this invoice should have been 7,350. They entered it at 6,650. So another question could have said, a sales invoice of 7,350 was undercast in the sales day book as 6,650. So take note, if you see undercast, is the same thing we're going to do here. Don't worry about that. So here, an invoice of 7,350 was entered in the sales day book as 6,650. Remember I told you, whatever is in the sales day book is what will end up on the credit side of the sales account. Agreed? So if that is the case, it means that, let's try and visualize it. It means that if I open my sales account, which remember should have a credit balance, like I just said. So I have my sales. It means that on my sales account, what I'll have there is this figure. What they are saying here, which is what? 6,650. But they are saying the figure should have been 7,350. What will I do to make 6,650 7,350? Obviously, it's what? It's to top up, it's to add, right? What's the difference? So 7,350 minus subtract the 2, 6,650 will give you what? 700. So when I put 700 here, then the sum of these two figures will now give me what? 7,350. So all we need to do now, it means, is that what? The sales day book or the sales account has been undercast by 700. So another question could have said the same thing we've done here by saying what the sales account has been undercast by 700. So all we need to do is to actually record the 700 here to increase the 6,650 to 7,350, because the question has not said there's anything or there's any other thing that is wrong with the sales account. They just said somebody did some undercast. It should have been what? 7,350. They only entered 6,650. So our next transaction here, we're going to credit what? The sales account with 700. So we credit the sales account with 700 to increase it from what? 6,650 to the 7,350 figure. Now that we've done this, what goes to the debit side? Here, because remember, it's not suspense. I'm sure some of you are thinking, oh, it's suspense. No. Here, because it's a book of original entry. Remember I told you in the day books, we don't do double entry. So it's the total from the day books that we pick and then we now record as double entry. Now, if you record in the sales day book, don't forget that in the day books, all we record are credit transactions. If you want to record a cash transaction, it goes to something called a cash book. So if it's a credit transaction, it goes to the day books. So if you sell on credit, it goes to the sales day book. If you sell on cash, it would have gone towards the cash book instead. Remember? So here, because they've even told us that it is in the day book, it should tell you that it was a credit sale. If it's a credit sale, it means you sold it to your debtor. But let's not use the term debtor. Let's use the term receivable. So take note, what some people may call the debtor's account or the debtor account is also known as what? Receivables. Your receivables are assets. They have a debit balance. They are assets because they owe you money. In the future, they are going to pay you something. So it's a return you're getting. If we get to the advanced stages, you probably hear some concepts like it's a resource controlled by an entity that will lead to future economic benefits. But let's not talk about the complexities now. Just know that debtors or receivables are assets, and assets have a debit balance. So remember, if I'm selling to someone on credit for 700, then it means someone must owe me what? 700. So I come to the debit side and I record what? My receivables. Take note, some people may call this debtors, but let's use the new name according to international convention. So 700 is the amount for my receivables. So we just say being, let me just be dynamic here. So being an error of original entry now corrected. Remember I told you that the day books are also known as books of original entry. So if you make an error in a book of original entry, it's known as an error of original entry. All right. The next transaction here. They are saying a payment for building repairs. So let me clean all of these. Okay. So a payment for building repairs of 7315 was credited to both the building's account, which is an asset. So it means your building itself, the building structure, and the cash account. So this is what you pay with. Cash is also an asset. So you made repairs to your building. Don't forget this is an expense. It cost you 7,315. You wrongly credited it to the building account and to the cash account. Don't forget that if you make a payment for cash, what do? You credit cash. So it means the cash account entry is correct. What the person did was they didn't do double entry, they did double credit. So they credited both building and cash with the same amount. So what we are supposed to do here is to ask ourselves, okay, let's do our visualization again. I'm doing this because I think it's the easiest way to explain it. If I'm doing this, I don't have to do this because in my head I know the entries. But here, let's say I have my buildings account. Don't forget it's an asset, so you should have a debit balance. They are saying that I have credited this buildings account with 7315. I do not want the 7315 here. So what do? As we've been doing so far, what do? I come and make a debit entry here to cancel it. So first thing I do in this VII is to debit my buildings account with 7315. So it means now in my buildings account, this doesn't exist, it's gone. Now, what is the right thing to do? They said it's a payment for building repairs. I told you expenses have what? A debit balance. So if I now have to properly record the expense, what do? I record building repairs 7315, and question is, what goes to the credits? Is it cash? No, it's not cash because they said 7315 has already been credited to the cash account. It means that I now have a figure that is in suspense, figure that I don't know where to send it. So suspense. So effectively what goes to suspense will be the sum, or just multiply these figures by 2. So 7315 times 2 will give me 14,630. So 14,630 goes to my suspense account. And here we can say being and let me just worry you a little bit, being an error of principle now corrected. It's called an error of principle because I took an expense and posted it in an asset account. Anytime you do something similar, it's called an error of principle. You flouted accounting principle. Like I said, don't bother with the names too much. I will be doing a number of correction of errors questions. If you follow me enough, by the time you're done with all of them, you will know all the names automatically. For now, just learn as we go along. Pick up the little things here and there. Do this question yourself again like I've done it and see how much you learn from this process. It will be a tremendous learning process for you. So that does it for the first part, which is the journal entries. The next thing they asked us to do is what? Prepare a suspense account to clear the difference. This is arguably the easiest task you're about to do in your entire life, preparing a suspense account. It's very easy. Let me show you how. When it comes to suspense accounts, all you are going to do, or all you are required to do, is to come to the journals you prepared here and identify all the ones that are named suspense. So let's start from the top. I'm going to highlight them. So in the first I, there's no suspense here. Good. In the next one, there is suspense of 1540 on the debit side. Okay. The next one, there is suspense of 13090 on the credit side. Noted. All right. The next IV doesn't have any suspense. V doesn't have any suspense. VI doesn't have any suspense. Then VII again has suspense on the credit side. All I'm going to do now is to open a suspense account and put these entries on the exact size that they are, the same exact same size that you can find them. So this is what I mean. Second, II, requirement II is to prepare a suspense account. This is how it looks like. It's just a T account. So suspense account. First thing you do is to bring the balance on the suspense account here. Watch this carefully. What did they say? They said at the top here, the credits exceeded the debits by 26,010. It means that the credits have more figures, have more balance than the debit side. What does it mean? It means the debit side is what is lacking. So we need to what? Chug in the balance. We need to plug the balance here. The balance they gave us here, remember, 26,180 will go to the debit side. Because why? The credit side has more. The credit side exceeds the debit. So your first place to try to solve this problem is to put the difference on the debit side. That's the first action. So you put the balance on the opposite side that has the shortage. Next thing, like I said, is what? Let's go to all the highlights. First one, suspense was on the debit of what? 1540. So I just come here and I say, let's even use the numbers. This is what error II, suspense on the debit side of 1540. So 1540 error II. I'm done. Let's go and look for the next one. The next one was error III, suspense on the credits side, right, of 13090. So I come to credit side, 13090. This is error III. Okay. Then the next one was error VII, also on the credit side. So right here, 14630. This is error VII. Okay, now all we are going to do, we are done. I don't see anything else in the question. When we sum the debit and the credit side, it should be equal. If it's not, we are wrong and we will both be in trouble. So let's sum them carefully. So now let's sum them up, right? So on the debit side, we have 26,180 plus 1540. What does that give you? It gives you 27,630. 720. How about the credit side? We have 13090 plus 14630. That gives us 27720. So congratulations, you have balanced your first trial and your first suspense account. What this means is that the error has cleared. We have successfully corrected all the errors in this question and we have solved the company's problem. You should be proud of yourself for having come this far. All right, the final one is to prepare a working schedule showing the effect on the proprietor's loss in correcting each of the above errors, assuming that the loss before adjustment was 29,030. So typically, most questions would have told you the company made a profit and you're required to compute or determine the effect the losses and the correction of errors will have on the profit. But here we have a loss. Nothing will change. I'll show you how to treat this. What this means is that what we've been doing so far, they have made some errors. Obviously, because of these errors, the profit or loss figure they have in their income statement or in their profit or loss account will be wrong, right? So the income statement loss figure in this case is wrong because of some errors. We need to correct that issue. So let's call this statement of adjusted profit or loss for the year. So all you need to do is to state the loss they gave you in the question. So what we have, it is 293,090. So we just say unadjusted loss. What's the figure? 293,090. It's a loss, so let's put a bracket around it, right? Now this is what I'm going to do. Watch me carefully. I'm going to go through the list of, I'm still using this list over here. What you need to identify is, let me give you the rule before we even start. The rule, and please keep this, like I told you, this is the easiest method in the world. If that item, so first of all is identify, does the item affect the income statement? What do I mean? It must be either an expense or what? An income item, or anything that affects the income statement. So it means we will not be looking at things like assets, we'll not be looking at things like liabilities. It must be something that affects the income statement. That's number one. The next thing is, if that item is an expense, then what do we do? What you do is that if the correction was a debit correction, you deduct the figure from the adjustment. If it was a credit adjustment, you add. Just keep this in your head and you're good to go. I'll take that again. If you are trying to correct the profits for the period, all you need to do is tell yourself two things. First thing is what? Find out, does the item relate to an expense or an income or any item that affects the income statement? That's the first step. The next is that item, if it was corrected by way of a debit, you will just come and deduct it from here. If it was corrected by way of a credit, you add. And the whole idea is simple. Profits, or let's even say expenses and losses, are debits. Profits and gains and revenue or income, they're all credits. So if the thing, we're trying to adjust profits, then obviously, if that item is a credit, it means it's going to increase profit. If it's a debit, it means it's going to decrease profit. That's all. So I'm going to go through this list up here and I'll identify all the entries that were debit and credit. First of all, they must affect the income statement. So let's start from the top. Does cash affect the income statement? No, it's an asset. So this is out, it's on the balance sheet. Expense, yes, right? It was on the balance sheet. So expense will pick this. Was it debit or credit? Debit. What did I say? Deduct debit, add credit. So I come here and I write expenses. Oops, what's the figure? It was 826. Good. Because it was debit, I deduct. So 826. You can just write deduct debit, add credits. This is the simplest rule in the world. There are different approaches people use. People use acronyms. This works for everything. So just use this. All right. Okay. The next one. Suspense. Is it an income statement item? No. Discount allowed, discount received. Yes. So discount allowed is an expense. It affects the income statement. Discount received is income. It affects the income statement. So these two are both credits. So we can just add them. And the figure is 1,540 from here. So 1540 on the credit side, it means we'll add 1540. Remember I said add credits, deduct debits. So 1540 added. We can just say this is discounts allowed and received. All right, the next error. So here, suspense, does it affect income statement? No. Sales return, does it affect income statement? Yes. So sales return will affect my income statement, obviously. Do you agree? So yeah, there should be a 0 here, obviously. So this sales returns will both affect my income statement. What were they? Debited or credit? Debit. What do I do? Deduct debits and add credit. So the figure is 13,090. Since it was debit, I deduct 13,090. So 13,090 will be deducted. This will be my sales returns. Okay. What's the next one we have here? Purchase and purchase returns. So what's the figure? 120,050. So let me do this. Will this affect the income statement? Yes. Will purchases returns affect the income statement? Yes. In effect, the net effect is 0, because if I debit 120,050 and I credit 120,050, they will end up being 0. So you have two options. You can leave it out, but I think if it's an exam, let the examiner know that you know. So just list it and let the effect be 0. So a good student can just leave it out, but please just list it in case the examiner is marking with tick marks and you get a tick or half a mark for every tick. So purchases will be debited, purchase returns will be credited, 120,050. So purchases will be debited, so I deduct 120,050. Then purchase returns will be credited, so I add 120,050. Like I said, the effect will be 0, so you could have left this, but it's not a big deal. The next is these ones over here. Now here, wages and salary costs, these are expenses on the income statement. Employee social security, these are also cost expenses. These are payments, so either they are going to be cash or bank or a payable account, so they're all on the balance sheet. So we will focus on the debit side. So when we sum the two, 71,050 and 6,300, what does it give us? Calculator, 71,050 plus 6,300 gives me 77,350. So it's on the debit side. What do I do? Deduct debits, add credits. So 77,350. I come here, I deduct 77,350. I can just say employment related costs, something simple as this. All right, let's keep going. The next, receivables. No, this is an asset on the balance sheet, but sales, yes, it's on the income statement. What did we do? We credited with 700. What do I do? Add credits, deduct debits. So I come and add 700 because it's a credit. So I corrected as a credit, so 700, I add sales. Okay, are we done? Okay, one last one. Buildings, no, this is an asset on the balance sheet. Building repairs, yes, this is an expense on the income statement. Suspense, nope. So since this was debited as a correction, I'll deduct, remember the rule, deduct debit, add credit. So I deduct 7315 as building repairs. So 7315 deducted as building repairs. Okay, so now I can sum everything up. All right, so I add, let's just sum them up. So minus 293,090, my calculator, minus, okay, so minus 86 minus 293,090 minus 13,090. I can net off the 120,000, so minus 77,350 plus 700 minus 7315. Did you get 389,431? 389,431. So this is my adjusted. Well, I think this is negative, right? Yes. So adjusted loss. So from our unadjusted loss to adjusted, remember the rule was what? Please, if you forget anything at all, don't forget, deduct debits, add credits. If you know this rule, you know something so many people don't know, and you'll be at a significant advantage. So we've gone through an exam question on suspense accounts, correction of errors, and correction of profits or loss. If we've gone through so many things, we'll have another video on this. I'll teach you correction of errors in suspense accounts using exam questions. This is a reverse engineered or reverse learning approach, a problem-based learning approach where you use problems to teach. So here, we've gone through the types, how to correct an error. We will do multiple questions. The more scenarios you see, the more you try, the more you expose yourself to problems, the better you get. So I recommend highly that you take this thing yourself and go through from beginning to end. Whether you understand some little things or not, there may be some areas you may not be too sure of, no worries. Just go through exactly how we did them. Just go through, follow the same steps. You force yourself to learn the process. By the time we are done with this series on correction of errors, you realize one thing, that your knowledge is so good that any question that comes, you'll be able to tackle it. So let's end it here. Don't forget, if you love this video, don't forget to smash that like button, and don't forget to share this video within your entire network so that other people may benefit. So I'll catch you in the next video.